Welcome to Vantage. We're focusing on a global trust and one where we've got a sort of value angle. Welcome for the very first time to Vantage. Joe, you're the CEO and CIO of AVI Global Trust. For viewers less familiar with AVI Global Trust, maybe you could just give us a quick overview of what it offers investors and how it differentiates itself from its peers.
Well, first of all, thank you very much for having me. It's good to be here. AVI Global Trust is a global equity fund. Mm-hmm. It's about 1.2, 1.3 billion pounds of total assets. And as the name suggests, it invests in equities globally. However, it is quite differentiated from most of its peers. Philosophically, we like to look for investments in places where other investors aren't looking. In short, we're looking for inefficiencies, anomalies, mispricings, companies trading at discounts to what we believe their net asset value to be. And when you look at our portfolio, you'll see names that are probably less familiar to many of your viewers, and certainly very differentiated from portfolios of other global equity funds.
Okay. When we look at the sort of trust, maybe you could sort of explain a little bit about the sort of types of investments. So typically you've got sort of 3 types of investments, and then illustrate those with sort of examples in the portfolio. So holding companies, closed-end funds, and asset-backed special situations, I think, sort of show up regularly. Explain why those, and give us examples of those.
Yeah, well, as I said, we're looking in parts of the market that are perhaps neglected and overlooked, less well researched and less understood. And family-controlled holding companies is one area that we've really focused on for the last 40 years. They exist in Europe or in Asia, typically other parts of the world as well. They're listed companies where typically you'll find families are the largest dominant shareholders.
Yeah.
And beneath that layer, you find these companies tend to own quite interesting, often very good, high quality assets. Sometimes they're listed, sometimes they're unlisted. An example that features in the portfolio today is a Belgian family holding company called Edison. Yeah. Not that familiar amongst many investors, but its key asset, the largest asset, making up over 3/4 of the value, is a business called Belron, which is a private company. And Belron is perhaps well known to your viewers because one of its brands here in the UK is the auto glass repair business, which is a really fantastic business. But Edison really highlights what it is we're looking for. Belron is a fantastic business. It's not very well covered by research analysts. It's less well understood by investors, and it trades at a discount of around 35 to 40% of the value. And for us, it's really about getting exposure to high growth businesses, but on valuations that are very heavily discounted. And that's a feature that extends across all the areas of our activities. So you mentioned we also look at closed-end funds and asset-backed special situations. Within closed-end funds, most of our activity over the last few years has been focused on listed private equity, generally funds that own unlisted assets. So we've got stakes in funds such as HarbourVest, Partners Group, also Chrysalis, where we see quite a lot of activity in the underlying portfolio, trading on very wide discounts. And typically when we invest in closed-end funds, we like to be, if not the largest shareholder, a dominant shareholder, so that we can have a voice at the table, a seat at the table, and talk to management about what we think ought to be addressed. And the final area that you highlighted is asset-backed special situations. Most recently, those have come up in Japan, where we've been pretty active over the last 6 or 7 years, and typically focused there on good quality operating businesses that have substantial cash balances and other liquid assets on their balance sheet. And in some cases, as much as 100% of their market cap really in cash. That's the asset backing, which means that we can buy into those kind of businesses on very low valuations.
I'm going to come back to Japan, but as you're looking, so you're scouring the market, you're looking at these opportunities. Run us through the investment process, and in particular, so once if you're screening or you look at things and they show up, what's the process in terms of engaging with the management team? How active are you? And then you started talking about Japan. There's some interesting sort of changes in Japan from a sort of corporate culture perspective, which hopefully you can sort of expand on. And also, if you can, just touch on, what's going on in South Korea and the opportunities that are available there.
Yeah. So the investment process is built around the idea that we can buy a pound of assets that we believe is going to grow in value over the next few years, but we can buy that pound at something like 60 pence today. We're not the only investors to do that, but very often when you find a pound of value on sale for 60 pence, the market is being quite efficient and there's good reason for it. And we're trying to find the anomalies. But if you're buying something for 60 pence in the pound, the question is, how do you monetize that 40 pence gap?
Yeah.
What happens? And as a wise person once said, hope is not a strategy. And we firmly believe that doing something, being proactive in order to monetize that gap is key to unlocking value and a key part of our strategy. Now, when you're investing in family-controlled holding companies, you can't be an activist shareholder because there's a shareholder that's larger than you and more dominant and is in control. So in that sense, we're looking for aligning ourselves with other shareholders who are doing good things, who are being proactive and are going to expose us to events perhaps that unlock value. For example, in D'Ieteren, we believe that at some point in the not too distant future, Belron is likely to be either sold or a partial stake or a partial IPO, some kind of corporate event that will reveal to the market its underlying value.
Yeah.
And in the case of closed-end funds or even in Japan, we're much more proactive. We're more often than not a dominant shareholder. And when we have ideas as to why the discount exists and what management should be doing about addressing that, then we make our points known, typically and certainly initially, privately, respectfully and constructively. But as time goes on, if we're not making headway, then we will go public and launch public campaigns. But a key part of our approach is being proactive. And when we see a roadway to unlocking value, we want to push management down that road.
Okay. And I asked you about the sort of changes that you're seeing in sort of Japanese corporate culture and also perhaps, the sort of transitional changes that you're seeing in South Korea. Do you want to talk a little bit more about that?
So Japan has been a value market or a market that has been of interest to value investors for a couple of decades.
Yeah.
The idea about being able to buy into these massively overcapitalized businesses and very low valuations has been around. But for many years, it was a kind of a value trap. It started to change about 10 years ago under the late Prime Minister Abe when he introduced Abenomics, the 3 arrows.
Yeah.
And the third arrow really dealt with some structural reasons for why Japan was underperforming and undervalued. And those go to the heart of the corporate governance code and the stewardship code that were introduced to try and compel companies to do more for shareholders and try and encourage shareholders to act more like owners.
Yeah.
And at the heart of those measures and guidelines was the idea that shareholders should be more actively engaged with companies, and companies in turn should listen more to shareholders and focus on driving those returns. So, as I say, we've been very involved. We've had public campaigns, we've had private campaigns, we're actively engaging, and there are a growing number of activist shareholders, shall we say. In Japan, it remains a fantastic opportunity. We've got almost 25% of AVI Global invested in Japan. And we're seeing real change in culture. Previously, companies didn't want to focus on shareholders. They were more bothered about making sure the company employed as many people as possible and provided a pension to as many retirees as possible. And they didn't think shareholders deserved a return on their capital. All of that is changing, and companies really are pursuing a variety of different measures, all designed to boost shareholder returns and improve corporate governance.
So you built this sort of entering into, what you think are sort of attractively valued businesses. How's the performance been? And we can split this because it's been a relatively volatile year. So what's the long-term performance of the trust like? And then how have you fared over the last 12 months?
Well, over the last 10 plus years, the trust has delivered returns somewhere in between 11-12% annualized returns.
Okay.
It's more or less in line with the MSCI World Index over that time, and comfortably ahead of the MSCI World ex-US Index.
Yeah.
So we tend to have relatively little invested in the US.
Yeah.
Over the last 12 months, it's delivered a return of around 9%. That's behind both the MSCI World and the MSCI World ex-US Index.
Okay. And what were if you're looking at sort of the performance over the last 12 months, what are the positives? What's contributed well? And what are the sort of the drags? What's hindered performance?
Well, the biggest contributors have come from Asia.
Yeah.
They come from some of the Korean names, some of the Japanese names, and a holding company listed in Singapore called Jardine Matheson.
Oh, yeah.
Which has done very well. And the laggards or the detractors have come from other parts of the world. We've had a poor investment in Germany called Gerresheimer, which has been quite a painful loss. And more latterly, some of the investment trusts, Chrysalis, for example, has been weak over the last few months on concerns around the whole software industry.
Yeah. Okay. Are there particular features? So if an investor's looking at, are there specific features of trust that you want to highlight? The dividend, discount management, anything else that you think that an investor should be aware of?
Well, the key feature, I think, about the trust that is relevant is that it is different.
Yeah.
And that when investors build a portfolio, oftentimes you'll see in investors' portfolios different names, but when you look at look under the bonnet, you'll find a lot of the same companies. So you're not really diversifying. With AVI Global, it's a genuine diversifier. It's doing something different. It's owning different companies in different geographies, and it's definitely not a closet tracker.
Yeah.
We've got 17% invested in Korea, 24% in Japan. That's 40% in 2 countries that make up 7 or 8% in total of the world index. So I think that's really the primary distinguishing feature. You mentioned our discount. We're trading on a discount of around 7% today.
Yeah.
We regularly buy back shares. That's under the control of the board, but committed to using the buyback to reduce the volatility in the discount.
Okay. And dividend?
Yeah, so we pay dividends, of course.
Yeah.
We've maintained or increased our dividend for many years. On occasion, we've had to dip into reserves in order to do that, but the board is committed to a progressive dividend policy.
Joe, I've sat in this chair, interviewed many people. Very few have sort of come up with the portfolio of stocks that you talk about. So I do buy into it. It's different. It's great having you on the show. I hope you return. So let's hope that you sort of come back in 6 months or 12 months time with a good story to tell. Thanks for being on Vantage.
Thank you for having me.